Hello there, this is Victor Santana, and here we're going to take a look at the Dow 30, and this is the ETF symbol DIA, which is very popular. And we're going to go ahead and take a look at how this chart is telling us as far as for swing trading, at least the way I uh, swing trade, and hopefully you will find this to your liking as well and take advantage of this. So the first thing what I do is I look at the overall trend by looking at the moving averages, and I do have 3 moving averages placed on this chart here, which is the daily chart. And you can see the red one here is the 100-day moving average, and then we have this kind of light cyan one, which is the 50-day moving average, and then the top one is the green, is the 18-day moving average. And usually when all 3 are in this arrangement, we have a pretty good bull market that's been going on, and so we want to look for trades to go long. So in this case here, we are looking to buy the dips and sell the rallies, and by doing so we then look at the second factor, and that would be down here, which would be our CCI. If you look right there, CCI 5. What that does, it is looking back 5 days and calculating these moves. And I won't go into detail on how it works, but this has very good probabilities. Basically, once it rides down in this area here, then it would snap back up to up here, which then will give you this up move on this. And once it comes down here in this zone and snaps up to here, you have this up move here. And in this case, it continued up higher until we get another pullback, which is in this area. And once it gets to this above the 100, you sell in this area. So basically it trades between as far as the way I use it, negative 100, the center line is 0, and the top line is 100. So I'm looking for entries below negative 100, and I look to take profit or get out of position at 100. So that's how I'm doing the CCI swing trading, which lasts usually 3 to 4 days to take the first profit, and then from there it just depending until I get triggered out with my trailing stop. Okay, so let's look at today. You see down here we are below the 100 line right here, and I have this shaded, so if it's outside of the shaded area, it is now in my setup zone. In this case, since we're going long, my setup is to go long here in this area. So I have my setup. Now the part that is going to give me the signal to buy is based on the price action. And what we're doing is we're buying momentum, a shift of momentum. We're not trying to guess where the bottom is. And so what I'm doing is I'm going to wait for proof of the shift of momentum, and in this case it will be price action. So currently the stock is down in this area, and what we're going to do, if the next day, in this case Monday, price would have to break above the high of this candle. Okay, that includes the little tail or the wick, and in this case I'm looking at the high. Well, it's not going to give me the high. The high is 169.85, which is the absolute high for that day on Friday. I will put a buy order right above that. Now, how much more? You can put a penny, 5 cents, just depends. What I usually do is, depending on the price of the stock, in this case this is a $100 plus stock, you can put like 5 cents, 10 cents above it. And once it gets above, you know there's enough momentum or interest of people buying, and the probability is it's going to trade higher the next few days. Once we're in, we then keep our eyes on the CCI and look for a move up to the 100 zone. Once it gets to the 100 zone, that is our first signal to take some profits. For example, if you look back, this right here, we had a signal to go long here. And if you follow the candle up, here it is right here. So we put a buy order at the high of this candle here, which is, if I move over, you can see if I line the line up right there. Next day, it didn't break above it, trade sideways. So we move our buy stop to the high of this candle, which is looking at it 169.22. Well, lo and behold, the next day you get this big gap up. All right. Unfortunately, it happens once in a while with this big gap up. We get in at the high of this price here. Did trade all the way up here, then cool down near the end of the day. So we're positive in here. You know, we paid quite a bit more, but that is how it works. So we have this big gap. The next day here, we still higher than what we entered, but it's still a red candle. And the third day, we're way up here. Now, when it's up in this range, look at the CCI, and you can see it's been above the 100. Now it's cooling off. Price is going higher, but the indicator is going lower. That means it's a divergence, so it wants to pull back sooner. So what we do is we go up here, we put a trailing stop right under the high of this little candle, and lo and behold, the next day you see this big down move. We're out on this trade right here, right at this area. We're out and wait for the next position. So if you're quick, you could put also, once we know you're up here, you put a short to go short, or go into options to get a put. Once it trades down here, you take your profit here. Especially with options, you just wait 1 or 2 days, move, and you're in and out. So this is basically what we're doing. We're going to wait for a move to back above to the 100 to take some profits. Where can that be? Well, looks like most likely it's going to be right in this zone right there, what we're seeing. Okay, so that's our potential, or maybe even right here as well. So we're just going to have to wait and see how the market tells us. But this is how we do the swing trading here, based on the CCI and the price action. Now let's quickly move over to the SPY to give you an idea. And here, I'm going to go a little quick. We're above the 3 averages, which is good. So we want to look to go long. Look at the CCI. It's going down. It's not below, so no setup. So what we have to do is wait patient on this to go long. Now, once you're advanced and know what you're doing, you can go short once it's up here, which, if you follow this line, is right here. So what you do is you go short if it breaks below there. It doesn't there, so you go the next day. And it doesn't, so you put a sell signal on the low of that. Next day, nothing, so you put another short signal here, or order to go short. This day, Friday, you had a gap down and continued falling. So here you would be going short and in the money, meaning that you're making money because this is going down, using the inverse ETF, and this is coming down. Once it gets down to this area, you unload your position. In this case, since we're counter trend, you could either close out the whole position or sell 3/4 of it, which could be right down in this area here if it happens. So if not, we have an exit. You put a sell stop here above here, so if it breaks up higher above in that range, you get out. But that's how we're playing it. So for the newbies, you wait until it gets down here. Alright, so that's basically how we do the swing trades, and I'll look through some more, and if I see any that have a setup, then I'll bring it up in the video. Thanks a lot, and keep your eyes on this page. Thanks.